Good morning. What's up, guys? And thanks for tuning in and welcome to another weekly crypto market update. This is Setup Saturday. And as always, I am here with Zero Cool. How are you?
Pretty good, pretty good. How are you?
Very good. So, as always, we talk about macro to understand Bitcoin's price movements. So, today, what we're going to talk about is, of course, the US jobs report from yesterday, the interest rates, inflation, global liquidity, and then as well, Bitcoin technical analysis with Zero Cool. So let's dive right into it. So as you can see here, the US job openings declined to the lowest since, the second lowest since December 2020. So it was minus 176,000 job openings in July. And as you can see, this is not good. So if we go to the next page, and the reason why this was not good is that it was way, way worse than the expectations. So in July, the government statisticians, they said that the US created 73,000 new jobs. And then yesterday, that number was revised, for June and July to 21,000. So as you can see here, we went even in minus 13,000 in June. So I came across this chart as well. So the job openings versus unemployed job seekers. And at the moment, the US has more unemployed people than job openings for the first time since April 2021. And this is not good. So we start to see cracks in the economy. We also saw the unemployment rate to 4.3%. And this is not good. One of the reasons I think this is happening, and I'm sure a lot of people will disagree with me, but I want to show this today, is, and I think, not only this, of course, it has to do with a lot of macro things as well, but I think a small percentage is linked to AI. And we saw this from a Stanford study that said AI adoption linked to 13% decline in jobs for young US workers. But look closely, it's only for the ages between 22 and 25. So I think if you're a junior at the moment as an accountant or software developer or service representatives, I don't think it will be easy at the moment to get a job. And I think this will get even worse and worse in the future. I don't know what your opinion about this is, Zero Cool.
The AI, people mistake AI for being actual AI. Current AIs are like language models. And they're only as good as how good your input is. I've been using AI with my job for like 12 months to enhance it, what I do. But if you don't know how to use it and how to talk to it and correct what comes out, because what comes out is not instantly correct, it's no good. Therefore, sure, it has some pressure on the job market, but not as much as people think, I believe.
Yeah. So, and of course, a lot of people might think, why are you showing the US jobs reports? And the thing is, I spoke to a friend of mine yesterday, and the thing is just the US economy is the world's largest financial system. And whatever the US does, liquidity, interest rates, it just impacts the global economy and global assets prices, and especially Bitcoin. And that's why we're here. So we have to look at what the US is doing. And so why are these job openings, why do we look at them for Bitcoin? And the thing is, a weaker labor market has an insanely impact on the rate cuts. So if the job openings, if there are less jobs in the US, if the unemployment rate goes up, you have a higher chance that the Fed will cut interest rates. And this is what we saw yesterday. So yesterday, I think before the report, we saw only a 70% chance of a rate cut the 17th of September. And now afterwards, it's a 100% chance that, according to the CME futures, that the Fed will cut their interest rates. And we even see 11% chance for a 50 basis point cut. And if we see a 50 basis point cut, that's insane. I saw it. I said it in Discord as well. Then we will see an alt season.
Can you imagine 50 BPS spam?
Yeah, and the thing what we will have to look out for is, the key will be next week, we will see the CPI and inflation data. And based on that, so based on the labor market and next week CPI and PPI data, the Fed will make their decision. So next week will be super important. I think so. I saw a lot of people saying, we will be in stagflation. But honestly, I prefer to follow the Trueflation data, and Trueflation is under the Fed's 2% target. We know there's a 45-day lead. So normally it should be around here. So normally we will see a drop in inflation, and I think this might give the Fed a go to, well, obviously they will cut 25 basis points, but imagine if they do 50%, 50 basis point cuts, then that will be good for the markets.
Yeah, but do you think the initial reaction will be panic? Because I think 25 is already priced in everywhere, including crypto. And if they deviate from 25, say 50 or 0, I think there will be panic.
Initially, but I think that's the dip you have to buy.
Right, but that tells you don't enter a position the day before, right? Don't go X hundred long or shorts the day before this decision comes. Wait for the aftermath. It's easier to ride the wave afterwards than jump in when the wave is created, because you don't know how it's gonna go.
You wanted to show something on this as well now?
Yeah, I have a little chart from D7R. It's where I got my indicators from. Basically, it's the stock market price, and then you have all the data that we basically just talked about: unemployment rates, the interest rates, and then you have the yields: 30 years, 10 years, 2 years, and then you have the inverted yields, which is the short end yields: 2 years minus 30, 2 years minus 10, and 10 minus 30. And then if we go back in history and we look at dot-com bubble and the housing collapse, what we see is we have rising unemployment. You have the Fed cutting rates, and we have the yields pretty much stable as always, or like at the same percentages as they were during those two big major financial periods. Yeah, and if you just look at this chart and you see what happened before, if they cut interest rates, the market usually pulls back, and it's not a small pullback. It's like 40%, 49%, 30%, 26%, 20%. So this is why people are calling it, we're going into a period of stagflation, and it's going to hurt the stock market. But I believe you don't agree.
Yeah, that's the thing. We talked about it briefly before the stream, and I don't necessarily agree with that. Why? Because as you can see on the chart, every time the Fed cuts their interest rates, it's mostly has a reason. So on this chart, we see 2000, we see 2008, and we see the COVID crash. And I told exactly the same to Chris in Discord, because Chris is also always showing a chart. Look, when they cut interest rates, the market is dropping insanely. But I will say it's not because they cut interest rates that the market is dropping, or that the economy was going bad, or there was a problem. No, it's because there was a problem. The economy was going bad, that they had to cut interest rates. In 2000, it was the dot-com bubble, crisis was coming. In 2008, most likely it was the mortgages. Mm-hmm. So it's not because they cut interest rates that bubble imploded. It was it was because there was a problem that they had to cut interest rates. Same with COVID. It's not because of interest rates that we saw a global pandemic. No, it's because we had a global pandemic. We had to cut interest rates. So
true, but do you not think that they're hiding that there is a recession now? That they're like fudging all the numbers to make it appear everything is okay? Because in my eyes, the rally we had, it's pretty unnoticeable here, but this is April. From April till now, we've been up only in the stock market. And again, why do we talk about US metrics? Because this is what drives Bitcoin, right? You can slap a Bitcoin chart on this, and it will mostly follow the not the ups, but especially the downs, like where to de-risk. I look at this data to see like, where do I take chips off the table? Or
no,
when should I take
I'm even glad that you brought it up, because it's my next point, and everyone knows what my next point will be. It's all about liquidity. It's all about liquidity, global liquidity, and that's why the markets are going up. The markets, so the economy is not doing great. I would even argue that the world was better 20 years ago, when there was less inflation, when it was easier to buy a house and everything. The reason why the stock market is going up is because there is just so much liquidity in the system. There is so much debt that needs to be rolled over. And that's just why asset prices are going up, is because your denominator, so mostly your currency, your fiat currency, is moving down in value. That's why everything against it is going up. Housing prices, stock market, Bitcoin, and everything. That's why everything is going up, not because the economy is great, because I don't think it isn't.
Which sets a very dangerous predicate, is that if you don't own assets, crypto, real estate, stocks, you're going to be left behind, because this is never going to reverse, right?
That's why at the moment, well, for the next coming years, the rich are getting richer and the poor are getting poorer. It's because just this policy. But let me go back to liquidity, like I said. So let me show back my screen. And this was a very good chart I came across. This is the global M2, which is only about 40% of global liquidity. So that's why afterwards I want to go back to global liquidity. But you can see the correlation is extremely good. So this is why, and that's just why I said it, this is why asset prices are going up. They just follow the liquidity. They just follow the amount of money there is in the system. You can do the same with gold. So on this chart, there was a gold price as well. Gold is basically a proxy for monetary inflation. So so that's why you can measure the value of Bitcoin versus gold. We talked about it last week. There is about a 3-month lead lag. So normally, if you look at the gold price, so gold exploded this last week. Normally, in the coming weeks to months, Bitcoin should follow as well, but it's basically because of liquidity. So let's go to global liquidity now. So global liquidity is going up, and as I said, it remains the single most important macro driver across all the financial markets. It's going up, but just this morning, Michael Howell, so this is the guy that basically invented global liquidity. He wrote a message this morning in his premium research, and I wanted to show it to you guys. I want to show the whole message. So global liquidity may be breaking new highs, as the chart below shows. So this was the chart he showed. And gold and silver are ripping with it. But beneath the surface, US policymakers seem unwilling to follow. Evidence how the Fed and Treasury's latest deliberate draining of liquidity is prematurely tightening financial conditions, causing stress in US funding markets and increasing the risk of a market disruption or accident, especially given the weak economic backdrop and a large debt refinancing wave approaching. So he is not bullish. Michael Howell, well, he's still risk on, but you need to have a lot of caution because
very cautious.
Yeah, very cautious. So although liquidity might be rising, make sure to watch out. And as I said last week, global liquidity top will be around late January 2026. So if the Fed is still in QT, I don't even think lower interest rates will cut it. Or they need to be a lot lower so they can refinance the debt more easy. And then, so the thing is, and to me, it's all the puzzle, everything, each piece is aligning very well in the puzzle, because so I think there will be chop in September as the markets digest this low liquidity. But we also know that already Bitcoin, September is worst month in history. So the global liquidity, the chop in September aligns perfectly with the usual Bitcoin monthly returns. I showed this last week as well, but a new thing I want to show is, okay, but how do you then value Bitcoin's price? And there was a very good chart from N Squared Value. It's Timothy. He's from Kane Digital Island Research. And so he mapped it out. He mapped out Bitcoin in August and September based on previous data. And normally Bitcoin should be in September around, so it will stay in this range from between 113,000 to 97,000. And I think he will be right because there is not enough liquidity to push it higher. Although it will follow gold, I think it will be a little bit later. But maybe if we see the 50% basis point cut. So that's always a possibility. But I think this was a very good chart to show. I really wanted to show this because I always can say, yeah, Bitcoin's worst month in history, but what will the price then be? I really like to value Bitcoin and to give it a price.
True. And then whether it be overvalued or undervalued is how you allocate, I assume.
Indeed. And that's it for me, to be honest. So if you want, we can go over to your screen to see the TA. I'm not seeing much. I'm still in the same camp as last week, that we just will trend down. This is Shimoku Clouds. But honestly, that's only maybe a 1% drop. So I think it will be just drop in September.
Mm-hmm. That's fair. Let's start on a super low time frame, 15 minutes. Just look. So this was when we had job revisements. We had a little sell-off, like everything in the market sell-off. This is just like the price has been stuck for like almost 24 hours in a $1,000 range. It's just flat. Everybody was like, okay, I'm not trading this, and went AFK. And I think this will happen more often in September than it usually does. It's not uncommon for Bitcoin to be quote unquote manipulated when the price is just flat. But I think it's going to be more common. Okay, let's zoom out to the chart that we ended up with yesterday or last week. We had the job revisements, but those are actually not the job revisements that I meant to mark. These were from last month, I believe. But on next Tuesday, the 9th, we're going to have a revisement. So backdating or back altering the data that we have for a period for like a year and 2 months instead of 1 month.
Okay.
And I think I saw a Goldman Sachs report saying they're aiming to, or they're expecting it to be 500,000 to 1 million jobs less than reported. I think the one for August was like 50,000 jobs, 100,000 jobs. I don't remember. There's so much data.
Like I said, that should be bullish for Bitcoin, because then maybe the Fed will cut 50 basis points. So
it's another reason for the Fed to cut. Yeah. But yeah, the big number, the big swing number will be on Tuesday, and I'm gonna lower my exposure on Monday after seeing what happened on Friday. We had a sell-off on basically across the board crypto and stocks on a bad number. Then what can you expect if they report for like a year and a half worth of data that they're gonna backdate and adjust? So yeah, big picture stuff. I'm gonna de-risk a little bit on Monday. But this still holds true, I guess. We can trend up into the rate cut, and then after the rate cut, we'll have a nasty reaction, I think. And on the lower time frame, let's dive in, I would say. Let me see. I want some indicators on here. What do we want to throw on? Let's throw on the weekly and monthly, the Mondays, and then the Ichimoku cloud. And let's remove my drawings. There we go. Much clearer. We had that bearish cross a couple of days ago. I think we talked about it on the stream last
I said
week.
It was going to happen.
The cross was coming within days, so it happened on Wednesday. We're closing in the cloud, so naturally with a setup like this, the next target is the bottom of the cloud, and I think it's a beautiful retest of like the top of the cloud. I'm sure if you
it can go to the bottom, but it can be more on the right of the bottom.
Yeah, it's just sideways like this, right? Although this is already Wednesday, so yeah, it could dive into this edge here. But yeah, like you said, I think the conclusion will be it will be a boring sideways month, and I don't think we'll see major volatility up. I do think there's a possibility for major volatility down, and then the yearly open is probably like a good area to have some ammunition left. You should always have a little bit of dry powder left for when the market like shakes everybody out, because a very common issue that people do is like they buy the dip, which is great. So let's say from here you're interested in buying and you buy the dip here. This is your first entry. And then, yeah, okay, nice candle, great entry. You have used a little bit of your dry powder. It sells off. You're like, okay, I average down. Your average is now around here. And we think, and then we drop again. Again, okay, I'll use the rest of my dry powder. And now your entry is around like here. You've used all your dry powder, and the market has moved 10%. But 10% is not uncommon in crypto. So you need dry powder for like a nasty big ass candle of 10% in like an hour. It's 20%, but you get the point. You need to have dry powder always. And if you don't have dry powder, sell some stuff so you have dry powder. You want to buy, you want to have money ready, you want to have orders just resting on an exchange at levels like a yearly open. And I think we've talked about this last time as well. I don't think we'll take these lows, but below 75,000, Bitcoin's a steal. It really depends on the recovery. If we get there, if we get like a flash event where you have like your nuke, then you can your V recovery. This is a very common crypto recovery pattern where you nuke, it bounces a little, and then the market is like, actually, you know what? Overreaction. We're going to go back to where the price was. This you catch with resting orders, but don't full stack there. Yeah, the thing I want to try to say is have dry powder for a big event, and the rate cuts and the job revisements are two big events, I think, coming up in macro. Very short to each other, so that could trigger some price actions. Let's see if we can like find a little intraday setup to play off. We already sweeped Monday, and it was Monday high. Yeah, I don't really see much. Price is flat. Pretty sure if you throw on RSI, you'll see like higher highs in price, but RSI pretty flat or lower, like this. So this was like a 3 dives pattern, but other than that, not much to say, honestly. I think his preserve capital until opportunity arises, whether it be that they cut the rates and the market instantly starts pumping, or they cut the rates and the market slowly reacts and nukes. I wouldn't position beforehand, honestly.
Yeah, I think sometimes you just need to know where to allocate capital, when it's the time to make money. And I don't think September is the time to make money in Bitcoin. I do think that we will get to a point when the interest rates are cut that altcoins will do better. So this week I will research altcoins a bit more. That's something you can do as well. I'll try to make a video about it. And I think that's where the money lies currently. If you can do a good play, if you can find an undervalued altcoin with a narrative behind it, I think that is at the moment the place if you want to make more money. If you're just
Ethereum.
here for Bitcoin, just hold it, to be honest. It's not the time to sell. It's not the time to buy. Just hold it. We're still in a good position. I think the cycle will go up. I think Bitcoin will go higher for a little bit longer. So don't be afraid. Don't worry. And everything will be okay. Is it okay for you, Zirkul, that we do the predictions for next week?
Absolutely.
So it trended upwards. So I get the points for this week.
Yeah, we didn't get a big correction yet, and I think that's because I thought the job revisement that that's happening on Tuesday, I thought that was going to be on Friday. So that's my excuse why I lost this time.
I think we're just gonna range, like I said, nothing serious. So we're just gonna be here. I'm gonna put it at the bottom of the clouds in a week. So 109. What do you think? Higher or lower than me?
Same bottom of the cloud, but the line below it, so 104.
Ooh, okay.
There, yeah. I do think we're gonna have
inflation numbers as well.
Yeah, that's on Thursday, Tuesday. There's so much macro data, and I've said it's over and over.
Or the 19th, 10th? Sorry.
Yeah. I've said it over and over. I absolutely hate trading crypto based on macro. That's not what I fell in love with.
That's what moves market at the moment.
I know, and that's why we're here. But it's not what I like. I fell in love with crypto and Bitcoin because of the technology of like the mining price was. I didn't know what the Bitcoin price was when I got into crypto mining. And it only mattered to break even on the mining equipment you bought, and that's the only reason, only thing that it matters. And now it's job numbers, and then we go forward and like, oh yeah, those job numbers that we moved the market on, they're actually not that correct. We were only off like 1 million jobs. Sorry, guys. So yeah, It's not my thing. That's why I've also been way less active in trading crypto and just accumulating nuclear stocks for our nuclear renaissance that's coming within 5 or 10 years. That's basically what I've been doing.
All right. Just one last thing I want to say before we leave it. If you guys have any questions, just join our stream next week. So we are always live on X and on YouTube every Saturday at 2 p.m. Central European time. So just come in the chat, post a question, and then we talk about it live on the live stream. So we're gonna leave it here for today. If you enjoyed this live stream, if you watch it later and you enjoyed the video, just put a like on YouTube, put a comment, and then we see you all next week. So Freek, thank you very much for doing this with me. Thank you to be here every week. And of course, thank you everyone watching. And then we see you all next week. Bye, guys.
Bye.